Hello, everyone, and welcome to the Prosperity Through Multifamily Real Estate Investing Podcast. I'm your host, Cody Laughlin, and joining me for the first time in a while, Mr. John Beatty. John, good evening to you.
Good evening. It's wonderful to be here. We've got an actually fantastic guest tonight. I think we're going to really learn a lot because this gentleman has engaged in a lot of conversations with individual investors and kind of is in their head and kind of helps guide them on what real estate investing is and, you know, how to go about and how to make these investments, how to vet the sponsor. So I'm excited. I'm going to introduce Bronson Hill. He's on with us tonight. Accomplished real estate investor, 15 years of experience. He's helping people become financially free and helping them discover their purpose through the mechanism, which is multifamily real estate. He's also the author of the single best investment strategy during and after a pandemic, obviously written in the past year. And he's a general partner in over 800 multifamily units, worth about $60 million, and personally raised over $15 million in equity for real estate deals. And my favorite fact about him actually is just he's had more than 1,000 conversations and phone calls with individual investors. So anyways, Bronson, thanks for coming.
Awesome,
Happy to have
John.
you.
Cody, thanks so much. Really excited to be with you guys. Love talking about real estate and love just sharing anything I can do to help and just, keep people moving forward in their goals. And real estate is just an awesome vehicle to help people experience freedom with their time and financial freedom as well. So that's why
You
we
know what
love
else
it, right?
is great about real estate? The people.
For sure, for sure. And you're one of them, John. So I appreciate you. Man.
I know he did a great job. He didn't even miss a beat. You didn't even knock the rust off, John. Good job, man.
Hey, I sit right back in my seat and let's go.
It's like riding a bike, right? Well, Bronson, man, great to have you here, buddy. Really appreciate it. I know that we've been able to build a little bit of a relationship here prior to leading up to the show. And at the time of this recording, we're also going to have you appear at our next virtual meetup here in the month of April. So really excited about that. But our month of March, excuse me. Losing my time frames. But man, tell us a little bit more about your background and how you've kind of found your way into the commercial real estate space.
Yeah, well, it's really good to be here, guys. And I love talking, love sharing my experience. So my background is in the medical field. I was a medical consultant. I still have a little consulting that I do on the side just because it's just, pays really well. It's hard to walk away from. But I basically am like a lot of people where I wanted to experience financial freedom. And so I started investing in single family houses because that's how I thought people became financially free. Like we all kind of think we should
Classic
do.
straight.
Exactly. And so I got to where I had 4 houses. And I just realized it was a ton of work. And my goal still was to basically get up to 30 houses and be able to have, what I called passive income and be able to get just, streams of money showing up to my mailbox every month. That's how I envisioned it. But when I got to 4 houses, I realized it was a lot of work. And so I have a cousin of mine who's more of a cousin I've just come in touch with the last, number of years ago. And basically he said, your plan is interesting, but he said, it sounds like a lot of work. And I was like, yeah, it is a lot of work. But he said, why don't you try multifamily investing? And I said, well, I'd love to, but I don't have millions of dollars. And he says, well, you can raise the money. And I was like, you can raise the money? How does that work? So then he starts sharing, read this book, go to this event, start a meetup, do all these different things. So I basically did everything. Like I just did every single thing that he said because he's just uber successful. He's got 1,400 units. And so started on a path. Basically, I started a meetup in Pasadena, California. Our first meeting, we had about 60 people there. I basically met an investor at that meeting who just said, hey, are you doing a deal? I'd invest with you, whatever. So I was able to get coffee with him. And he said he'd invest, 100K into a deal. And I was able to match him up with another syndicator in that same meetup. And I was able to basically kind of bring a handshake together with the money and the deal. And now all of a sudden, I've got some experience in a 225 unit in Texas. And so that's how I got started. And then I ended up finding some partners. We ended up raising about $15 million for real estate. My role was really, continuing to build relationships with investors, having lots and lots of calls. Some days I'd have 15 to 20 calls in a day. Some days it wouldn't be as much, but just really getting into the conversation of what is the world of the passive investor, the high net worth individual, the busy professional, the retiree, or the business owner. So I'm really excited to get into the kind of that mindset and really what goes through the mind of a high net worth individual as they're looking at passive investing. And that's really my passion.
Love it. Couple questions, Bronson. Okay. Single family, It's a tough model to scale. Was that when the hair loss came in, or was that prior to? Just got it's a valid question because I'm balding myself, and I was in single family for some time. I'm just saying.
Yeah. Hey, gray hair, balding, it could all happen. Now, for me, I actually had an afro up until I started doing no, I'm totally joking with
I
you.
was gonna say I want to see a picture. No, no.
I did. So for those that are listening, I have a shaved head, so there's no hair there. But no, I actually had the gift of losing my hair at 18 to 20. I just started losing my hair, and I was insecure about it. So then I shaved it, and I was like, well, I'm not insecure about that anymore. So it's been a while.
Right, you gotta own it.
Nice, nice.
Yeah.
Well, you mentioned a friend that kind of introduced you to multifamily. Who was the friend?
My friend, my cousin. You talking about my cousin that introduced
Oh,
me
excuse
to
me. Yes,
multifamily?
yes.
Yeah, my cousin. So his name is Wes Hill, and he runs a really large. They have about 1,400 units they do in house. It's called Multifamily Asset Advisors, and he's just an awesome guy. And so he's the guy who kind of has been a mentor and friend, and just really kind of helped me along the way to vet deals, vet partners, and just I run everything by him, which has been great.
Awesome, man.
Excellent.
Awesome. Definitely cool to have somebody close to you that obviously family like that, or a close friend that, has been in the space and doing what you want to do. It definitely good to kind of start off with that way. But, your background kind of resonates with me. And I think we've discussed this maybe offline prior to, but I come from the medical profession as well. I've been in healthcare for 13 years now. And, my career trajectory back in 2010 was to go up that corporate ladder in the medical profession, and discovered Rich Dad Poor Dad, became an accidental landlord, rest is history, and here we are today. But nonetheless, man, cool to have that connection. And very similar as you did, and this is a message that I'm trying to spread to people as well, is following the script, right? You have people out there that have come before you that have paved the way for success. They've laid the framework out for you. We live in a digital age now where there's so much access to information readily available, and people are willing to share that information. So don't recreate the wheel, just go out, follow the script. And I followed a very similar path as you. So anyway, really
some
cool.
people are following a different script, Cody.
It's true.
Some people are following the rat race script.
Yeah,
and that's kind of what I wanted to crack, crack the head open of the high net worth individual, and how they are thinking differently. What is different about their script, and particularly what you may have to understand, connect to them when you're talking about real estate investing and durable income and multifamily.
Yeah, so the reason this topic is really important to a lot of people, I know it sounds like you guys have a lot of listeners that are more active in real estate, and hopefully this will be interesting to active investors that are hoping to have conversations with people with lots of money that will invest in deals. And also there will be some passive investors here that also be able to resonate with this. But in my conversations, a few themes have really come out, as far as these, mini conversations. We did a lot of metrics around this. I would ask net worth questions. The average net worth of the individual I spoke with was 2 million. There were some that were upwards of 10 to 30 million. And, some people obviously just don't disclose, but basically, they kind of fall into one of a few categories. Either they're really busy professionals. For example, Cody, you mentioned, medical background, lots of doctors, people that are very, very busy. But the interesting thing about this is a lot of these doctors get paid very well, and a lot of these professional CPAs, attorneys, but they don't have financial freedom, because if they don't go to work, they don't get paid. So I literally know doctors that make like millions per year, but they work 60, 80 or more hours a week. And if they stop working, they don't know what to do. So the challenge for some people, a lot of people in general that are looking for passive investing, they really have a money problem. And the money problem is not that they don't have enough money, they have too much money, they don't know where to put it. The stock market looks really scary. We're at all-time highs. Where exactly you put their money, especially with all of this printing that's happening and different things there. So the issue really comes down to time. So if I'm a doctor, if I'm a lawyer, if I'm a business owner, retiree, if I'm getting calls on properties, and I'm managing as far as what's happening, whether it's you're actively doing it, you're actually the landlord, or even if you have a property manager. I had properties in other states, and I found that it was just so much work. So really, time is really the most valuable thing, and that's why a lot of people are very interested, and they discover, right, they have this epiphany. Either they read Rich Dad Poor Dad, or they have a friend, or somehow they get in touch with, oh wow, I can actually do something where I know I can get pretty consistent double-digit returns. And when you first hear it, it just sounds too good to be true. Like, it sounds like a scam. Like, what's going on here? I remember when I first heard about it, I was like, this sounds kind of crazy. Like, how is this even possible? But so a lot of people that, we have different levels of sophistication. Some people, it's brand new to them. It's just very basic questions. Some people have been doing it a long time, but really time is very, very important. And so really one of the issues is really the idea of scalability, right? So if if I own a house, 2 houses, 3 houses, 10 houses, and a lot of these people do, they realize the thought of getting another house or getting another duplex or a fourplex, it's just so much work, and it becomes really another job. And so I think really the first thing is just that issue of time, that time is uber valuable, and to have an investment that you put a little bit of time in to just vet the deal and vet the property and the sponsor, and then you can invest, and then it's all passive, is just really revolutionary for a lot of people.
Is durable income a topic of conversation? I mean, do people really know that that's kind of what they're looking for, or their goal, or they're just looking for a place to park their money?
Yeah, it's a combination of both. And again, you have that many calls, you have 1,000 calls, you're just going to get people on all ranges of the spectrum. So when I'm talking to, individuals that are looking to invest, I try to ask them some questions about their experience and what their goals are. And usually that will come out. So there's a series of questions that I ask investors, and, if somebody wants that list, they can reach out to me and I'll share it with them. But it's just basically, net worth, their real estate investing experience, are they accredited? And really, what are their goals? What are they looking for? Because if cash flow is really important, that's one thing. And other people, it's appreciation. A lot of times it's a mix of both. So, but a lot of people, again, they've never done it, or they have very little experience. But by investing a small amount in a deal, my goal really for them is that it can really develop almost like a muscle you didn't know you had, right? Like, you didn't even know this was possible. You thought you had to be working for the next 20 years or the next 10 years, but you realize you've put money in this other bucket. You called it, durable income, or durable, some other way to create income. And what it does is it just basically allows you to live life more on your terms, where you can leave your job if you want, you can retire if you want to, and you go part-time. You just have a lot more flexibility knowing that the money's going to come in versus you having to work.
Sure. Hey, Bronson, going back into initiating the conversation, what's the icebreaker? Because I think when you're speaking to physicians, engineers, these are very highly intelligent, highly educated investors, right? And they're in their intelligence, they think they have a very good grasp on their financial situation, when, sometimes we know that, like you said, hey, you could be allocating this or diversifying your portfolio into more secure assets. And especially right now with what we're seeing in the stock market, even though we feel like there's a bubble, a lot of people are riding that appreciation wave. Oh man, look, stock market's up 30% from last year, or whatever it is may be. But what's the icebreaker? How do you ease that in and get people to realize that, hey, there is alternatives that you could really benefit from aside from just the stock market?
Yeah, that's a really great question. I think there's really 2 different ways to go about this. I think for a lot of listeners now, Cody, I've looked at your stuff. You're just a great. You do a lot of social media. You get a lot of stuff out there. You're tagging folks, putting your events in there. And so you're basically positioned as an expert because you have a platform, because of your experience, because you're doing podcasts. You're out there. And so people know you as, you are real estate Cody. You're the guy who's doing multifamily. You're looking at property. You said earlier today, I was in San Antonio looking at a property. It was awesome. And so basically, a lot of times for people that are maybe listening, that they've never done that. And so the first thing I tell people that are new is to basically start a MailChimp account. It's like free, or $10 a month, and just start putting out, a monthly or weekly, or you can even do an automated thing where you add somebody to your list and they get an email every week automatically. And you start telling your story that, hey, you are a real estate person. These are the things that you're learning, even if you're passively investing, because then again, otherwise people know you as medical guy, or they know you as salesperson, or you sell cars, or you work as a pilot. And so it's, again, kind of getting to know you. It's a different context. That's why the first deal, a lot of people talk about friends and family, because people, first of all, they know they can trust you, and then they start to get your story, they'll invest. It's very difficult just to go out and say, I'm just going to go approach doctors and give them this message they're going to invest. It usually comes from the second thing, is really what you're doing, and what I'm doing is really how you position yourself in the marketplace, saying, hey, this is what I'm doing. These are the type of events that I'm doing. And basically you start thinking about, this person that's very busy, like for me, that's my target. Those are the folks. I have a person in mind, a name, an age. These are the issues they're dealing with, and I try to speak to those issues. And so as I talk to those issues, then people that are, physicians or lawyers or, business guys or, they work in medical, whatever, they're going to be drawn to that stuff. So I think it's kind of two things, and it's hard for somebody just to like hang a shingle and be like, oh, I found a doctor or whatever. But, if you come from a family of doctors, obviously you've got trust there because they know you. But I think really being able to present yourself in a way that people see your story, and also they understand that you can actually help them, that you can actually say, hey, these are some things that I can help you to increase your income and free up your time.
Two things there, Bronson. Number one, I'm so still in that tagline, real estate Cody. John, that is the new tagline.
I'm going to call you that from now on.
I'm putting it on every one of my my platforms.
Real estate Cody.
Yes, appreciate that.
Love it. Hey man, just tag hashtag real estate Cody.
When I'm on the stage one day and people call me that, Bronson, I'm gonna give you that.
That's it. That's all you, baby.
Awesome, man. Awesome. I love it.
But hey, listen, I appreciate the recognition for our presence, and I want to just really kind of cement that point of telling people your story, because everybody is probably familiar with the Dan Hanford model, the know, like, and trust triad, right? And Dan's thesis is like, hey, how can people establish an opinion on you if they don't even know who you are, right? They have to know you first. And so how do people do that? You have to tell them your story. Well, you're only one person. You can only do so much networking, meeting people face to face, but you have to have multiple platforms to do that, and you have to have multiple touch points and keep that constant engagement with your database. So just point being is I completely agree with that strategy. And I know it's worked for us tremendously and our expansion of our network and our story. So I really appreciate you alluding that.
Sure. Absolutely.
Yeah. So let's talk a little bit about the kind of nurturing process after you've established the MailChimp, you're starting to plug people into your database, you're starting to tell people that story. How do we continue to get people to lean into forming that opinion of liking you and trusting you?
Yeah, this is interesting. This came up in a conversation recently. I've thought about as somebody that I, started to work with, and I realized through his podcast, just like what you're doing. I really felt like I got to know him through his podcast. And when I went up and met him at an event, I was like, oh, hey man, how's it going? And the guy's never met me at all. And I'm kind of gregarious and I'm social, whatever, but I think he was just taken back. Who is this guy? Whatever. But, what it does, it's really amazing when you put yourself out there. And honestly, to me, it can feel a little vulnerable sometimes because you're just constantly sharing stuff. You're like, I hope this is helpful. I hope, it feels a little personal if people don't like your stuff and like what you have to say, but it's so important because it gives people the chance to literally spend, minutes and even hours or tens of hours or dozens of hours with you and get to know you. So they do have that sense, like what you were saying, Cody, is that they have a chance to get to know you. And so, I think that for people, any sort of content production, whether it's writing books, doing podcasts, doing videos, telling your story. And then what happens is having some sort of, we call it a funnel, right? We call it a way that people can learn more about you. So what I always say, at the end of my videos or at the end of my emails or any event that I'm doing, hey, we do deals. If you're interested, go to our website, bronsonequity.com. You can join our investor club and, we'll schedule a call and build a relationship with you. And so that's basically our process. And so just having a process there. So when you basically have them, they join your club. Again, this is probably after the MailChimp for a little while. You've kind of got some people there. You can also just do it one-on-one interpersonally. But basically, it's great to give them an example of what a deal would look like or talk to them about what a specific deal would look like or any experience that you do have. And then say, that this is our process. This is what happens. This is what happens when we get a deal. These are the type of partners that we work with. And this is something that actually I encourage somebody who's new is you don't have to do every part of the deal. I think when I first started, I thought oh my gosh, I got to find the deal and I got to raise the money and I got to do that. And it's like, you don't have to do it all. You can get partners, you can find people. And that's why networking is so valuable. But when somebody calls or when somebody is interested in learning about you, it's really important that you do things that really, you get into the things that are important to them. So I would have a little spiel of like, here's our questionnaire. I'll walk through the questions and I'll figure out who I'm talking to, or what's their sophistication level, what's their experience, and then I'll give them some information. These are the things that we do. These are our core values. We're conservative, and this is an example of that, where we're very transparent in the way that we communicate with investors, especially when things don't go well. Because in real estate, some things go great and some things don't go well. And we need to be that's one of our core values, is to be very upfront about that. And then really looking for long-term partnership. And so we share those things, and then I just leave it open for questions and give that space for people to talk. But I think having a process, having continual communication, having those drip emails, it's just a way that you can show people that you're consistent even before you actually work with them.
And that's well said. What you're doing is putting a piece of yourself out there every time. Social media, YouTube video, podcast. Now you've kind of established yourself in the forefront with your content. It's educational focused, right? And then you've got a kind of a call to action that says, hey, if this is valuable to you, if you want to learn more, let's have a conversation. And then in that conversation, you're trying to learn more about them, right? I mean, what's their pain point, and how can we potentially partner on something in the future, right?
Yeah, there's one other thing I wanted to say about that real quick too, is that the more, because again, I know we're speaking to people that have different ranges of, brand new to more experienced, but there's also a real element of psychology that I've seen at work here, is that basically you have people that, have money, and, what do we do? A lot of times when there's an opportunity, I've got an event I'm thinking about going to, but the early bird price ends tomorrow, right? So when am I going to sign up? If I'm going to sign up, I'm going to sign up tomorrow, right before the early bird price. And so we've actually found some ways to really create a sense of urgency around a deal. So when you do have a deal, it fills up quickly. So, our last deal, we filled up $8 million in 24 hours. And how do we do that? A lot of it is what I call is kind of teeing up investors, kind of getting them ready and setting that expectation, because that's kind of what was happening before, not quite to that level, but it was happening. And so what we would do is say, just so kind of in the midst of the conversation, I say, just, our deals typically fill up pretty quickly. Our last deal filled up in a couple days. So, usually it's there's no pressure to invest, but if you are interested, just let us know right away, because they do fill up very fast. And what it does is that kind of gives an investor a sense of, oh, wow, these guys they're busy, and this is kind of like a real privilege to get into a deal, right? And so you feel kind of honored if you get in. And so it's a little bit of the psychology, but nobody wants to invest and then it takes weeks to finish it or whatever. You want to be like, I got in, I'm so glad I wired money that day, though I wouldn't have gotten into the deal. And that's kind of the thing that we were having. So it's interesting too, when you're working with investors, is just finding a way to create a sense that this is something that is desirable. And obviously you got to have great stuff, and you got to have great service, and you got to have all those things, but creating that sense of scarcity or urgency, I think, is really important, because that's just psychology. That's how, like I said, with even how I do it with conferences. So
yeah, well, this is such a timely topic, Bronson, I got to tell you, because John and Brian and I we're in the middle of a 506c raise for a co-GP deal here in Houston, and a lot of our philosophy and our approach, and when it comes to investor relations, is exactly what you just mentioned, and creating that sense of value, but also scarcity, in that, hey, you really want to get in because this is a great opportunity, and here's the value that we're going to provide for you for doing that. So I really appreciate that. But going to your point about the psychology, I'd also argue too that it's important that when you're networking and interacting with investors, you kind of alluded to this earlier, but you got to remember to keep the focus on them and their needs and their investing thesis, right? And I think innately, the first time you go out and start raising capital, you start interacting with investors, the thought process is always your needs, right? Well, I need to raise money, I need this, but you've got to shift that focus and keep the focus on the investor and the people that you're networking with to really start nurturing that relationship. Would you agree?
Yeah, absolutely. I mean, the best time to raise money is when you don't need it. Right? When you're like, we're good. And so, but it's in general, that feeling is a vibe that we put out, right? It's a vibe, if I'm going to a car lot and I see some guy and he walks up and he's all eager, whatever, you know what I mean? Like, you can even imagine it. You're kind of going, oh my gosh,
it's
this feels
off-putting.
This guy's going to come. Yeah. It's like this. So it's kind of that schmarmy, slimy, whatever feeling. And we've all experienced that. And, but I think you're 100% right, is that we have to really put ourselves in the shoes of investors and say, hey, and think of it this way, this is how I try to look at it, is that what we have can really help people. And like for your deal currently in Houston, if investors invest in that deal, they're going to be helped a lot. They're going to find ways to grow their passive income. I've looked at that deal. It's a great deal. So I hope, people look at it and they invest in it. And, I think the idea of really putting investors first and realizing that, and this is kind of how I've thought about it, is that a lot of investors they may not even know they have a problem, but they've got a problem because, if they're heavily invested in stocks or heavily invested in cash, we're going to be in trouble because of right now, primarily, this is a little bit off topic, but with the money printing that's happening, the 1.9 trillion that's happened, if you look at a figure, I'm going to get a little geeky here about monetary policy, but if you look at the figure, if you search M1 and then you search FRED, which is the Federal Reserve chart, it will show basically all of the physical cash as well as all of the money that's in bank accounts. And that number has gone up between 4 and 5 times in the last 12 to 18 months. And so sooner or later, it's not right away, sooner or later this inflation is going to kick in. And when people are in an asset such as multifamily real estate, they're going to be very protected from that. So I get to feel like, man, I get to go help people to help them, substantially long term. So I try to think of it that way too. But you're right. You really need to look at it not just, hey, how do I do this, but what's really going to be best for investors? Because if you're not genuine, it's very obvious, and people are going to see right through you.
Yeah, that's right. I mean, you can buy a 30-year bond right now and get a 2.5% coupon. Or you could get 10% cash on cash or whatever with a syndication, 15-20% IRR, and it's a product that most people don't know about. And yeah, we have something to offer legitimately to help people diversify their portfolios.
Yeah. I mean, our educational system is designed to withhold this financial literacy, right? I mean, these are principles that are not taught in our upbringing. It's not taught in our school systems. It's not taught to our youth. And so people, when you talk about helping them to understand they have a problem, the problem is that there's not a true fundamental understanding of real financial literacy. And so I think that's the pitch, right? Is we want to show them, and I think we have an obligation to show people that, the lack of that education in our school systems is not going to build that long-term wealth for you. This following the mold, and like we mentioned earlier, just relying on a W-2 salary and hoping that your 401k is going to hold you at the time of your retirement. It's just you're putting yourself and you're exposing yourself to a lot more risk in that, in my opinion, than investing in real assets and whatever else. But
yeah, I think what you said is true. Is just the real, and I say this often at our events that we do. We do these monthly events, and I just say, the best investment you can make is in your own education. And it's really, I mean, Robert Kiyosaki would say that too. He's like, the difference between the rich and the poor is like the vocabulary, and it's the things that we, say and the things that we know. Because, and I was at an event one time. He said, wealth is not what you have. He says it's actually who you are. And so he said, truly being wealthy is losing everything, or have, if you were to lose everything, you could very quickly make it back. And I thought that was very interesting. And I think there's things that go beyond that when it comes to, the idea of stewardship or generosity and other things as well. But I just think for people that, are aspiring to be wealthy, to learn as much as you possibly can. And Jim Rohn has this quote that says, you're the average of the 5 people you spend the most time with. Right. So if you want to be wealthy, you better get around wealthy people. If you want to be successful, get around successful. If you want to lose 30 pounds, get around people that are working out. It's just who are you around? And if you want to don't be the smartest person in the room. Get around these people that are smarter than you, because you're going to learn something.
Absolutely.
Yeah, actually, love Jim Rohn, and it's easy, especially. And Cody might agree with this. Some of the folks in the medical profession, I come from the engineering profession, have a lot. They think they're really smart, right? Because they are, but they think that translates into all areas of their life. And so there's a bit of humility when it comes to learning and acknowledging that you don't know everything, and seeking. And where we come in,
100%.
Completely agree with you, buddy. Completely agree. Well, Bronson, I want to make sure the listeners caught on to the fact that, listen, you've raised over $15 million in equity. you've just referenced $8 million in 24 hours, which is every operator syndicator's dream, to be able to raise that capacity of capital in such a short period of time. I mean, that really helps you sleep at night when you have that bandwidth and that experience. But, that has translated from your experience in really understanding investors. And this is kind of the conversation we've had up to this point. And I want to kind of get back to our initial introduction to the fact that you've had conversations individually with over 1,000 people, and this isn't just emails or text. I mean, you've literally had thousands of conversations. I want to kind of talk about what are some of the things that you've learned through those conversations. Share some of that wisdom in all these, glorious conversations that you've had with so many people.
Right. So, like I said, it's usually one of three people. Either it's a busy professional where time is the biggest issue. It could be somebody who's a business owner where it's time, as well as, like I mentioned, a money problem. Just where do I put this? I'm making all this money. Where do I put it? Or it's, somebody who's a retiree or really wanting to retire. And so, you get all ranges of people kind of within that mix, but a lot of themes come up. I mean, I think one of the biggest things that I've learned, we talk a lot about education, is just that if you become a person of value, then people will trust you and they will want to work with you. And what I mean by this is, this was a quote that I'd heard. I was at an event and somebody said this. They said, make yourself valuable to valuable people. And it kind of comes from a similar Jim Rohn type of quote. And I thought about it. I was like, oh man. So, there are ways that you can go to people that are valuable, which are like passive investors or even other operators, syndicators, other people you respect, and make yourself of value to them. So instead of saying like, hey, give me money, or hey, would you, so some successful syndicator or some successful person, hey, would you mentor me? Is, one thing you could do if you're looking to be active is to say, what is it? What can I do to help you? What's your biggest challenge right now with your business? And if you ask that to really successful people, you'll give them pause, because they're like, nobody asked that question. Everybody's always wanting something from them, rather than saying, well, what's your biggest challenge? And can I help you with that? And it's the same mindset we bring when we speak with high net worth people, right? Is we're trying to really understand what's the biggest challenge that you're facing, or what kind of deals are you looking for? What are the challenges? Are you having trouble finding deals? Are you having trouble? Do you feel like you need more education? Do you feel like you need more, networking? Like, what are the things that you're looking for? And so I think for a lot of people, I do think high net worth, they can really value like all those things: education, finding more deals. I also think for one educational piece that's kind of neglected is people that do a lot of passive investing. Those people really could have much more of a platform. And there are a few of them, but if somebody's truly just passive, I know a few that do that, and they're very sought after because they're not out there selling anything, right? Yep. They're just simply saying, I've been doing this for years. And these are the things I find conservative. So sometimes there are groups that do that kind of talk about passive investing. But again, it really comes down to that question of value. And I wish I had something, so profound, like mic drop kind of stuff, but this stuff is not difficult. I think it's just that if you want to raise millions and millions of dollars, you have to be willing to have many calls. And of those calls, those 1,000 calls, 17% of people actually invested. And the average investment size for a couple deals was around $72,000 per deal. We raised our minimum to $75,000. And then I had a conversation in the presentation about net worth and how much potentially you should invest. It went up to about $114,000. So, you can kind of get geeky with those numbers, but you realize if you want to raise millions of dollars, you've got to have lots and lots of phone calls and be willing to engage. Or if, maybe somebody else if you're not a person who wants to talk with investors, find somebody else who can come in and do that for you.
17%. That's fantastic.
That's a great conversion rate. Yes, absolutely.
I like that you have that number. That's good.
I'll take those numbers any day for sure. But hey, I take away two mic drop moments out of that piece there, Bronson. And number one, I love what you said. And actually, I might even coin this title of the episode here: make yourself valuable to valuable people. That's such a powerful statement. And I think it's so important for people to really digest that and understand that, because this is in establishing this relationship with investors. It can't be just, hey, I'm a real estate investor, how you doing? You really have to be able to solve that problem for people, which leads into the second point you mentioned, is you got to ask the question. When you're trying to identify people's challenges, how do you know if you don't ask? And so that to me, I appreciate you alluding to those 2 points. That's my two biggest takeaways there. I think those are mic drop moments, because that's essentially, it's not easy in application, but it's easy in concept. And you have to get out there and you have to get comfortable. Just like you go out there and tell your story, you have to get comfortable with understanding these principles that you just brought up. So very, very good advice. I appreciate that.
Sure.
You can post it tomorrow. Hashtag real estate Cody.
Real estate Cody.
RealestateCody.com. It might be available. You might want to get it now before you post.
Can we go buy that URL, John? Can we do that tonight? You working on that? Okay, great.
Yeah, he's on it. Okay.
That's my tech guy. Him and John, him and Brian, man. They're my tech guys.
We got you. We got you, brother.
They got me. So, well, cool, Bronson. Well, listen, man. Tell us a little bit about. I think you've written a book here, as John alluded to in your bio. That was very timely in, this COVID world and whatnot. Tell us a little bit more about the inspiration behind the book.
Yes, I have the book here. It basically is the single best investment strategy during and after a pandemic. And so it's a free download on my website, bronsonequity.com. It's about 25 pages. And it basically just gets into what's happening now, what we should be doing with our money. Really, I'll cut to the chase. The whole point is to get into assets such as multifamily investing because of the inflation hedge, because of the tax benefits, because of the great returns and the low risk. So that is, it's something that I'm offering to people. I also have some stuff on YouTube that just talks through understanding real estate deals, multifamily syndication in particular, and just a bit of my experience in relation to what can be helpful to high net worth individuals.
Excellent. And remind me one more time. Go ahead, John. Good.
No, I was just going to say, money printer goes burr. Is that the theme of your book?
Money printer. Yeah, exactly. Well, this was actually before I wrote it a little bit before all of it kind of ramped up even more. But I mean, in general, the dollar has lost, 97, 98% of its value over the last 50 years. I mean, people say, oh, a hamburger used to only cost 5 cents and now it's $3. It's not that a hamburger costs more. It's just that we have many more dollars out there, right? And so the people that, with all this printing that is happening, the people that are not going to be completely destroyed over the years are people that own assets such as real estate, the case for precious metals. Some people like cryptocurrency and other things. I'm actually doing an event on what's the best investment of those three. So that's actually, people can reach out to me for that as well. That's going to be a fun one, April 21st.
You might want to be careful. John's going to be on that one.
I know he will. Yeah, maybe you'll be arguing. Which one would you argue for, John?
Oh, Cody's poking fun at me. I'm a crypto head.
Oh, nice. Okay, awesome. Well, you better be there.
Crypto hashtag.
Crypto John. There you go. Crypto John.
CryptoJohn.com.
I gotta get so many websites now.
No, I know. No, but it's funny that you mentioned this topic. I sum this up under macroeconomics and really understand the drivers that actually are going to impact our business and impact our investing strategies. You hear the conversation coming up almost daily now, if you're paying any attention about this topic of inflation and interest rates and such. And we pick up John. We like to look at him as our kind of macroeconomist and whatnot. But nonetheless, I think it's very important for people to understand that keep your finger on the pulse. There's varying opinions on which way we go, and there's a in-depth knowledge when it comes to these principles. But the timeliness of the book is very, very important because it's really important to understand where we're at in this market cycle and how that's going to impact not only our investing decisions, but impact the passive investors. How are the changes in our macroeconomics going to impact our investments? And so really glad that that's out there. I appreciate that.
Yeah, for sure. No, it's definitely, that's why I wrote it, is trying to help people to see what's coming. And I think it could be significant. It may not be as significant as they think, but I think over time, it has been and will continue to be. So
awesome. Well, and speaking of that, Bronson, kind of tell us where is your strategy leaning now post? Not that we're post-COVID yet. I feel like we're still in this kind of wake, but kind of how has your investing thesis changed? If it has, what's on the horizon through 2021 for you?
Yeah. So like I mentioned, I mean, I personally feel with the amount of printing and that's happening, and I don't mean to be just a broken record, it really is unprecedented. And if you really look into the chart, and you just see how much money and cash reserves there are and different things, I think that it is going to be very significant. There's a interesting YouTube series called The Hidden Secrets of Money. And if you haven't seen, I recommend it. It's about a guy who does a lot of precious metals, but he kind of goes into every single fiat currency, the last 5,000 years. And so they basically all failed. And I'm not saying it's going to fail today, tomorrow. Hope it lasts a long time. We've enjoyed a lot.
Reserve currency lasts about 100 years. Ballpark.
About 100 years. Yeah.
Yeah. And I think we're like US dollars, 80 or 90 into the current.
So basically, I really think that it's important for everyone to get money into things that are not, just savings or bonds or even necessarily stocks. Stocks have some inflation protection, but I think, being in real estate of not any kind, but particularly multifamily, people always need someplace to live, and it may not keep an exact pace with inflation, but over time it will. And so, and then what happens, you kind of get a double benefit. You get the appreciation of the asset, and you get that the loans are actually worth less in time because of the future dollars. There's more dollars available. And so there's a guy actually named Hugo Stinnes. I just did a YouTube video on this, but they called him the inflation king. This was in 1923 in Germany, and Germany basically it was the Weimar hyperinflation. They went in and they printed, and he went in and he saw this was going to happen because of the Treaty of Versailles, and there's a lot of history there. But he basically went in and he owned a bunch of businesses. He borrowed to the hilt as much as he possibly could. He bought thousands of different factories and metals and all kinds of things. And then when inflation hit, he paid all the stuff off in very low debts. So I'm not, sounding the alarm saying, we're going to have Weimar hyperinflation of the dollar. We're going to be in wheelbarrows of cash. But, from stories that I've heard, it was, one day things are fine, and the next day or the next week, things had dramatically changed. And so I just think the more you're positioned in assets such as metals, real estate, potentially crypto. I'm personally not a crypto investor as much. I know John is, but finding something that's outside of just holding cash or being in bank accounts or even just having it all in stocks.
Ray Dalio said cash was trash, and everybody, laughed at him about 2 months later because it didn't hold up well. But like looking back on it now, you're like, yeah, we know what he was talking about. He was ahead of his time when he made that comment. But, yeah.
Yeah. Again, just goes back to the point, just make sure to be a student of the environment we're in, be a student of our investing theses and strategies, and understand the things that impact us as entrepreneurs in this space. And I don't think you can ever stop getting educated. So I think we can have a whole nother series on this exact topic. And I know John would be absolutely looking forward to that. But unfortunately, we don't want to hold you up all night, Bronson. So we're getting near the end of our time here, man. But really appreciate this conversation. Very, very timely, both in kind of the wake of COVID, but just for investors out there that's going out there and interacting and trying to build their business, raise capital, and looking for alternative investments as well as passive investors. I think this is a great topic. So really appreciate that. So before we take off, man, I got 4 more questions for you and then we'll wrap up. Okay.
Sounds good.
All right, man. So listen, tell us what you like to do for your continued education to further your own investing.
I think continuing education, I love reading books. I do all kinds of personal development. I'm reading a book right now called The Slight Edge by a guy named Jeff Olson. Great book, short book. And it just talks about the little things that we do every day, the habits that we form, how they can really work for us or they can work against us. And so he's just like, if you read 10 pages a day of a great personal development book, you'll be profoundly better after the end of the year because you will have read just many thousands of pages of personal development books. So I think just doing small things every day can be extraordinarily amazing over time.
Absolutely. Side note, John, when I connected with Bronson, I don't know, however long ago, Bronson, he sent me this really cool quote book as like a kind of thank you gift or whatever. And I absolutely love that book, man. I love those
Awesome.
daily quotes, those self-development quotes, and it's really powerful. You got to work on the mindset. So I appreciate that. But so what have been some of the lasting lessons you've learned along your journey?
I think, a big one is if you're willing to do the things that other people are not willing to do. So meaning your willingness to be able to fail. I really think your willingness to be able to fail is a correlation to how successful you're going to be. Because a lot of people are so afraid of failure. We're so afraid of rejection or failing in ways, and we all are. I mean, me as well. But I think it's that desire, just saying that I'm gonna get this, even if it takes more time, more effort, and it usually takes any project you're doing. Usually takes twice as long as you think it's going to be, or more, and it takes way more work than you thought, right? But if you commit to the process, it really doesn't matter how long it takes. It matters that you commit to it, that you made the decision. Tony Robbins says it's in your moments of decision that your destiny is shaped, and I really believe that. That is basically when you decide that, hey, I'm going to go full-time real estate, or I'm going to, quit my job as a passive. I'm going to become a full passive investor within 5 years or 3 years. Like, those are things that are possible, but they're things that you're going to have to work at. You're going to have to educate yourself. You're going to have to take actions. You're going to give up other things. You're going to maybe stop watching TV 3 hours a day. You're going to have to stop doing things that you enjoy. And so, life is full of trade-offs, but it's just really the willingness to continue to go after your dreams and your goals, I think, is so important, and really the commitment to those things, even when it gets hard.
Yeah, I love that. Love that. All right, Bronson. So what would be some advice you would give to the listeners to help them grow their businesses?
Yeah. So I think just coming back to what we talked about, the, really adding value, just really going to somebody who's a couple steps ahead and say, what's the biggest challenge in your business? And you will catch them off guard. They will not be expecting that. And then as they're sharing, really listen. And, they may not really know quite what to say, but as you talk to them, they may open a few things, and all of a sudden you're like, oh, wow, maybe I could really help with that. Maybe I could help them raise money, or maybe I could help, I could help find a deal for them, or maybe I could help in this way. And so this business with real estate, especially syndication, it is such a team sport. It really is something that if, the saying is, if you want to increase your net worth, then it really is, it depends on how you treat your network. So it's the idea that, like, how I network and how I treat people and how I add value, that's really how I'm going to grow individually. And even, I feel like I'm full of quotes today, but Zig Ziglar had this quote, you can have everything in life that you want as long as you help enough other people get what they want. And so it's just that idea of, like, it's really about putting other people first. And, if you're somebody who's newer or is interested, it's just find people that are a few steps ahead, and just try to make yourself a value. That's my biggest thing.
Fantastic advice, man. Really, really great advice. And again, I think I'm really going to call that's going to be the title of this episode. I really like that. But all right, Bronson, hey, man, tell the listeners how they can learn more about you, get a copy of your book, and get connected with you.
Awesome. Yeah. So you can head over to bronsonequity.com. You can get on our investor deals list. We're always looking for good, passive investing partners. If you have any questions about anything I shared, even that list of what questions do you ask people when you have calls with them or you're getting together with them, just for any reason, you can feel free to email me. It's bronson@bronsonequity.com. And I look forward to connecting with anybody who's interested in connecting.
Awesome. Bronson, great conversation, man. Really appreciate your time. Thank you so much for tuning in with us.
Hey, Cody and John. I'm going to say real estate Cody and Bitcoin John. Just appreciate you guys letting me be a part of this. And when you guys, hashtag those and you're doing big things, don't forget about the little people. So thanks so much. This is really a lot of fun, guys. Had a lot of fun being with you.
It was, man. Thank you.